Right. I think those who join online, you can hear me, right?
Yes, sir, we can hear you.
So we will start the today's topic, divisional performance and transfer pricing. It's a relatively large area, right? So probably we won't be able to finish it today. It may continue for the next session as well. So the divisional performance and transfer pricing. So this is important when it comes to performance evaluation of managers of a business. We need to consider some measurement to evaluate the manager. The organization has different divisions. We call them responsibility centers. So these responsibility centers, how we are going to evaluate the performance of these responsibility centers, especially the managers of those responsibility centers. All the responsibility centers are not the same. Some centers, they are responsible, the manager of the center may be responsible only for the cost. Right? We call this cost center. Some centers, right? So the likewise, the different responsibility centers, you have different responsibilities of the managers. Performance targets are typically allocated to specific manager in control of the manager who has a control of particular division. We have the target. Specific department in control of specific department of the organization. These departments in accounting terms are called responsibility centers, right? Normally, divisions, department of an organization under which, under a particular manager operate, we call responsibility centers. So, which means the areas of business where one manager is responsible for the center, performance and the budget. So, responsibility for decision making is delegated to decentralized unit. It will important for head office to maintain controls by setting targets for the areas and controlled by local managers. So, normally when the responsibility centers available means that the responsibility is decentralized and given to those particular managers. So, the central level should set some targets and to monitor whether those targets are going to achieve. So the responsibility accounting is the system of accounting that segregate revenue cost into areas of management responsibility in order to control performance. So when you are going to evaluate the performance, you have to identify what are the revenue costs relating to these responsibility centers. So responsibility center is any part of the organization. It is headed by a manager who has a direct center responsibility of the performance. The responsibility centers are 4 categories. Some centers, the managers are responsible only for the cost. So typically these centers generate income cost and do not generate revenue. So we call them cost centers. Cost centers. So in management accounting, basically we identify in a factory, we discuss overhead absorption. We have cost centers, no, factory 1, factory 2, stores, maintenance, likewise, production cost centers, service cost centers, cost centers. One particular manager is responsible for the cost of that particular unit. Then rarely you may find the revenue centers where that the divisional manager is responsible only for the revenue. Right? Cost centers are there in most of the organizations. The centers incur some cost but do not generate revenue. But most of the cases, when you are generating revenue, there may be relative cost also. But here that the particular managers may not be responsible for those costs, so they are responsible only for the revenue. Right? Rarely you may find. The most of these centers generate revenue normally come under the profit centers. The particular manager responsible for the revenue as well as cost both. Profit center. And the last category, the responsibility center manager are responsible for revenue cost as well as the asset invested in the system. So this is the highest level of decentralization, right? Because responsibility of investment regarding that particular division also given to that particular manager. Right? They can take investment decisions also. They are responsible for assets. So when you are evaluating cost center, there are certain measurements the business should use. Those are not the same as the revenue center, and not same as the profit center and the investment center. So in this topic, we will first look at what are the different the measurement criteria we can use to evaluate the performance of these four centers. And when it comes to these evaluation criteria, measurement bases, we can discuss financial, monetary terms as well as non-financial measurement as well. Right? So we will first take the four types of responsibility centers. Cost centers, managers are accountable only for costs that are under their control, not all the costs. Even in the cost center, there may be certain costs which is not come under the control of the management of that particular center. So that when you are evaluating performance of a particular division, if you take any cost which is not controlled by that particular manager, that should not be considered. Right? Cost center, the managers are accountable for the cost they come under their control. Revenue center, managers are only accounted for their sales revenue. Right? There are certain divisions, their sales force is there, sales staff is there. So you are concerned of their sales, right? How much sales generated by the division. So there may be sales team headed by a manager, right? So you will focusing on your performance to be evaluated based on the sales that they have. They generate revenue center. Profit center managers are given responsibility for both revenue and cost. Investment centers managers are responsible not only for profit. Now in the investment center, they are responsible for revenue and cost. That is a profit. In addition to that, the working capital and the capital investment, the assets of that particular division. Right. So we'll start with the cost center. Right. We take the cost center first. So which is something you are familiar with. The cost center is a responsibility center to which only costs are attributed. Now, if you take for an example, the organization may have a customer service division, right? Customer service. So that division does not generate any revenue. They make the customer service, after sales services, right? We have some workshop where the customer come up with some defect product or some other things. So you are providing service for this customer. You make it free of charge within the warranty period. So you have that business organization, some workshops, right? The customer service is provided, and they do it free of charge. So they don't charge any fee. So that particular center manager is not responsible for any income. They just incurring cost. The organization will use these centers to collect customer service costs. like in the business organization, maintenance division sometimes. Right? So they are providing within the organization, providing the maintenance service. So when you are evaluating the performance, that you don't have any revenue there, right? The maintenance cost they incur. The cost center also very useful for organization because they aid management in controlling cost, allocating specific budgets to particular cost centers. Right? So they know now, for example, maintenance division, they know okay, these different divisions, how much annual maintenance cost you have to spend. Right? So those information you have to get from this cost center management. The staff members has a clear limit on what they can spend and helping to ensure costs are well managed. Right? So then different divisions, how much you can spend, can allocate. So the performance measurement of the cost center, the simplest form of measuring the cost of a cost center, performance of cost center, comparing budgeted and actual result. You have budgeted cost for a particular task, provide service for a particular division or provide customer service, and what is your actual? So if you are exceeding the actual, that is a variation at first stage. This will measure the management ability to control the cost. So customer service manager, for instance, have a budget of 10,000 per month, and they will be appraised how well they deal with the customer needs within the limited account. So the key performance indicator of this would be subsequent variance analysis, which will indicate how much manager under the or over the budget. However, when it comes to cost center, it may be unfair sometimes. Evaluate the performance based on this financial indicator. Sometimes there will be adverse variance of the cost incurred than the budgeted, because maybe that you got more customers, right? For example, normally there will be allocated amount for the warranty, right? The customer service department, when the customers come with the product with defect during the warranty period, you have to make it free of charge. So you have allocated an amount for the division, right? The manager try to provide the service within that allocated limit. That means you efficiently use your resources and all. However, if that manufacturing process last year had more weaknesses, so the products, there are a lot of product defects. As a result, more customer came for this division. Right? So that manager cannot say that, okay, this is the maximum budget we are allocated, so we can't make your product free of charge. That is the warranty. Right? So in that case, it is very important to use these non-financial performance also when you are evaluating the cost center. We are evaluating cost centers. Non-financial indicators are important. Non-financial measures like how efficiently you provide your service. Customer queries processed per hour. Right? Customers inquiries process. Customer satisfaction is very important. Right? For a cost center, service center. Now, my previous example, there are a lot of product defects, but if the service center manage to rectify all the customers may be satisfied on the after sales service. So the company may not lose the sales. Even with that, the issue with the production. Right? So if you purely focus on the variance, whether that the actual cost incurred is more than the budgeted, so that is not fair. So when you are evaluating the cost centers, it is highly important to consider these non-financial measures as well. Even now, you can reduce the long-term cost incurred by providing better training for a staff, employees, the customer, services, the kind of services. So when you train employees in the long run, their efficiency might increase, you can reduce the cost. But in the year that you spend that training, so there you may exceed even budget sometimes. So there may be relatively adverse. The cost will be high. So when it comes to performance evaluation of any responsibility center, we should not focus only the financial measures. Not financial measures also take into consideration. When it comes to cost center, by nature they don't generate any direct revenue. Right? Now, in our overhead absorption activities, we take the factories also as cost centers. But when it comes to performance evaluation, we don't consider the factories as cost centers because factories involved in the production, right? So when from the factory one transfer item to factory two, we have to use the transfer pricing. And you have to calculate what is the contribution, what is the profit of that particular division. Right? Otherwise, that is unfair for those managers who are responsible for those factories. So practically, when it comes to performance evaluation, factories are act as profit centers. There you identify revenue and the cost both. In certain cases, revenue may be visible, certain cases, revenue may not be visible. Right? So later, this topic, we have the transfer pricing part. For example, factory one produce item, transfer to partly complete item to factory two finish the goods, and transfer that to sales outlet. So ultimately, sales are done by sales outlet. Right? The actual revenue generation part made by the sales outlet. But normally, we have to use the transfer pricing. So your total cost is 500 per unit, and you are selling it for 600. That 100 profit should be allocated between factory one, factory two, and sales outlet. So for that, you have to use transfer pricing by the factory one to factory two to sales outlet. Then sales outlet may be getting at 580 at transfer price. So they are selling for 600. So their profit is calculated only for 20. So 500 total cost to total second transfer price. You have to allocate between the divisions, right? Right. So the cost centers basically, if you take a maintenance division, stores, like customer service department, after sales, the workshop, right? It's kind of service center, customer service center. So those are directly cost centers. So when you are measuring cost center performance, mainly we can use cost per unit of repair or something like cost per unit of cost per one customer. Then the variance between the actual and the budgeted, those are financial measures. But in addition to that, we have used some non-financial measures as well. So we are dealing with these responsibility centers. First one, cost center, managers are responsible only for the cost. Second one, managers are responsible only for the revenue, for the revenue centers. So the revenue center, responsibility center, that is focused solely on generating revenue. The good example for this is a fundraising department of a not-for-profit organization, right? They don't worry about the cost, right? You have to raise the fund. Right? Now, for an example, even in a set, right, in your batch, right, for a one particular event, you are allocated 5 team leaders and asked to raise some fund, right? So then that's a kind of student association or something. So they focus on the fund you raise, right? So that particular team leader is responsible for raising the fund. So you will be evaluated based on who is the party who raised most fund. That can be available even in a school. So not-for-profit organization, that may be the fundraising. Even a commercial organization, certain sales department, sales divisions, if they are responsible only for generating sales, then you can take that as a revenue center. Right?
Idea.
Right. So revenue center rarely applicable for commercial sector. Now sometimes take insurance industry. There are some insurance managers. Under that you have some insurance reps, right? So they are to get more customers, right? Selling insurance policies. So in that particular division manager performance is measured based on the revenue, basically, right? Because cost is insignificant, right? So ඒක consider කරන්නේ නැහැ. ඒක ඒගොල්ලන්ගේ salary එකකින් ඒගොල්ලෝ bear කරගන්න, right? ඒගොල්ලන්ගේ allowance එකේ cost එක consider කරන්නේ නැහැ. That you have to transport and meet appointment somehow you communicate it and you sell your insurance. So the performance is equal to based on the revenue, right? Same thing can be applicable for in a bank, credit card division, credit card promotions. Right? So they manager the responsible. They manage a team back in. They team में कोच्चर credit cards अलगे sell करा. Right? They कहता मा एगोलंग performance. They got revenue center. Directly credit card या you करा के revenue का directly नहीं है. अपने credit limits take a number of credit cards take into consideration because when you are giving a credit card to a customer in the long run, when that customer purchases, and the bank will get interest, credit card interest, right? As well as the sometimes joining fee nowadays in the promotion joining fee they remove as well as even annual fees for the first year. Most of the cases remove, but later you can get. So those are revenue centers. So how to measure the performance of a revenue center? So the revenue center key measure is the revenue. So sales department is an example, focus on achieving the sales. Revenue center also like to incur some cost, staff, salaries, can also measure as the cost against budget, but very lower. That is why we don't take it as a profit center, right? The cost is insignificant relative to the revenue. Insurance agent insurance division, right? Managers, right? Under manager, there are key, right? Those managers' performance is evaluated, right? They will be rewarded based on the number of policies that they sell. So even the companies, sometimes they are having sales staff, say work under sales managers, right? So they are responsible for generating the sales. That you create orders. Then the manufacturing, delivery done by some other parties. So sometimes there are some non-financial measures like Some managers may not be able to generate the revenue, but they create the brand awareness. That might create revenue later, right? So how many customers they approach, they have to consider. Brand awareness among the target group. Percentage of sales calls resulting sale, right? All key sales කොච්චරද? Right? Average sales per call, right? ඒ වගේ non-financial measures also you can consider. Then most of the centers that we are going to discuss are profit centers, right? Profit centers where the relevant managers are responsible for both cost and the revenue. If you take a sales outlet branch, they act as profit centers. Now you take this chain of supermarket, car gives or gives. If you take one branch, operate under branch manager, so that can act as a profit center. Even a bank, finance company, right? So any other sales outlet, right? Like you take a Pro, LG, Ava, Singer, all these outlets, the managers are responsible for profit, branch profit. So that as a profit center. So when it comes to profit center, responsibility for both revenue and the cost. Right? Examples may be stores operated under single manager. So it is high level of decentralization, right? So they can take some decisions. Very important thing here, when you are evaluating their performance, you have to take the revenue and the cost. Some of these costs may not come under the manager's control. So you should not include that. Right? You should not include that under their revenue, but under their cost when you are evaluating the profit. A very simple example, if I take say supermarket branches, you are going to evaluate the branch manager's performance based on the profit. So that profit should be controllable profit by the manager. These business places, premises is rented by the head office. And they have entered into lease agreement normally for a 5-year period or something like that, 10 years, long-term leases. That lease rental is the cost. When you are calculating the profits of the branch, that should be considered. However, when you are evaluating the performance of the branch manager, the lease rental of the building is not a controllable cost to the manager that has already decided. So you should not include that. Evaluating the performance. These were a different objective, right? What appear financial accounting profit take on me. We manager responsible expenses විතරයි අපි අඩු කරන්නේ. Right? So some certain cost. Now in financial reporting sometimes you may be allocating even head office expenses to all the branches. Right? You have to allocate all the cost of. Finally, when you take the total branches profit, should tally with the entire business profit. Right? So head office provides service for all the branches. Normally you allocate those costs. But when you are evaluating the profit center, the manager's performance, you can't consider those. Right? So it is controllable profit as well as a controllable revenue, both. Right? Now sometimes the branch profit may be increase the factors beyond the control of the manager. So you should not consider them in performance evaluation. Now, for example, sometimes suddenly government increases the prices, right? So as a result, you may be able to sell the product at a higher price than your original price, right? So your sales revenue increases because of the government increase the price. So existing product also you are selling at higher price. That can happen. So then it should not be considered in evaluating performance. Right? So that is something beyond the control of the manager. So both revenue and cost, when you are considering for the performance evaluation of profit center, should be based on controllable revenue and controllable cost. So the controllable profit should be taken into consideration. So the profit center, both revenue generating and incurring cost may be measured. So therefore, you can measure the profit. The profit target encourage managers to balance the task, incurring more cost with generating more revenue. So you can incur more cost. The manager we can have some kind of sales promotion activity, so we generate more revenue. Right? You find these branches sometimes they are having their own sales promotions. Right? So through that they can increase the sales. So you can use the normal traditional profit measurement basis like gross profit margin, operating profit margin, and net profit margin. The gross profit margin as a percentage of revenue. You know that gross profit divided by sales. So how well you are keeping the control the direct cost with the revenue. The operating profit, you deduct all the operating expenses. So operating profit as a percentage of revenue. How well manager keeping control of the additional expenses and all. Net profit margin means you deduct all the expenses and you take the net profit and as a percentage of sales. But all these situations, ideally you should consider the profit controllable by the business. Right? Not just the financial accounting. You know that normally gross profit margin, operating profit margin, net profit margin in financial accounting terms you can calculate. But when it's some performance evaluation, these margins may be different because you are making some adjustment for revenue and cost both based on controllability by the divisional manager. ඒක තමයි මෙතන විශේෂය. Divisional manager ට තියෙන controllability එක මත අපි ගන්න ඒ division එකේ gross profit margin එකට financial accounting වල ගන්න gross profit margin එකට වඩා වෙනස්. Operating profit margin එකත් වෙනස් වෙනවා. Net profit margin also can be different because it is not controlled. Then there are some other non-financial measures, customer-related focus and internal focus and learning and innovation focus. The customer satisfaction killing rather than profit center, right? Non-financial factor. That's where you are getting the customer feedback, number of complaints. Customer satisfaction, you can get the customer feedback satisfaction is so high means that it is good in that particular divisional manager performance. Number of complaints decrease, right? Reduce. So number of complaints as a percentage of revenue or something like that. You can use. Then the level of efficiency, productivity, internal staff wise, right? You can consider that. So like now say in the branch, you can say that number of employees per revenue, right? 400,000 revenue, how many sales staff people involved, right? So that you can measure their efficiency. How many sales made per staff? You see sometimes when you go to these garment shops, and normally it is like self-service, but you can go, you can select and you can do the fit on and you select the product. But you maybe get some little help from those sales staff. Sometimes you might observe this when you select the product, there's a sales staff person, they sometimes take some mark on the product. That will count for the sales that they have. That will be used as a non-financial indicator when evaluating those sales staff person. We have experienced this one, right? You go to the garment shop, right? Sometimes there may be some staff, right? They might provide a small service for us. When you select some items, they will mark, right? That is kind of code, their code. So that will be mentioned, recorded, right? Evaluate their performance. So even other shops, right? If you go for an electronic item, right, to purchase, right? So these staff come and help us. So if you make a sales, right, their name will be entered into the system. So that is taken as sales generated by that particular sales supporting. That is a non-financial individual, right? So evaluating that particular individual, here we focus on the total branch wise, the manager wise. So they can take that how many sales made by one sales staff on average, right? That affects the manager's performance also. Right? So if the manager gives proper training for staff, the staff will generate more sales, more profit. So that will be considered. Then learning an innovative perspective in certain businesses, it is applicable that how much revenue you generate from new product. Like you take a bakery, right? Pastry shop or something, restaurant, right? They may introduce time new meals, right? So that has the control. The manager has the control sometimes. If the manager is having the control over that, that should be considered as a performance evaluation, non-financial performance evaluation. The revenue from new products. Right? So these are those non-financial indicators. Right. Then we can move to the investment center, where the responsibility center managers are responsible for here you see cost, revenue, asset. So definitely one measurement is the profit related measurement. The other one the asset related measurement. You have to take it as a percentage. Right? So the most common method when it comes to investment center, responsibility center, where the managers are responsible for cost, revenue as well as investment in asset. So manager will be responsible for supporting itself enough sound assets at the disposal and acquisition. Right? Manager can decide, right? Buying extra machine or extra building space, right? They are responsible. They can sell non-performing assets, they can remove it, they can even transfer, right? They are responsible. They can take a new vehicle, additional vehicle for the distribution, right? So that is investment center. So in the investment center means the very high level of decentralization. Right? Managers are responsible not only revenue cost but also assets. May not be all assets, but some level of assets. Right? So when you are evaluating the performance of the investment center, we can use some measurements like return on investment, ROI, residual income, and economic value added. So these are the main measures we use in investment center performance evaluation. Return on investment is very simple. You take right before go to this measurement basis. Now there are some aspects you should consider that we have already emphasized. The controllability by that divisional manager. The appropriate type of responsibility center will be depend on areas that are under the control. So decision of managerial performance should be based on the controllable items. Manager should only accountable for aspects of performance which under their control. This means there may be a difference between reporting of divisional performance and reporting of managerial performance. A financial reporting, sometimes you have this segmental reporting, right? You report the different segments. That is a divisional performance. There you allocate all cost into the divisions when you are calculating the divisional profit. Right? But the managerial performance, you need not to consider all the expenses allocated for the division. So divisional performance should be evaluated on all items which are directly traceable to the division. Whether it is under control of manager or not. They are not given branch එකේ profit එක හොයනකොට branch එකේ rent එක අඩු කරන්න. right? ඒ building එකේ rent එක අඩු කරන්න. Even though it is not controllable by the branch. That is the branch profit, divisional profit. But when you are evaluating the management performance, you have to add it back. For all the branches where the rent is not controllable by the manager, when you are evaluating the management performance, you should not consider the rent. The divisional results may be adjusted for items that are not traceable in order to reflect the divisional performance. For example, allocation of head office cost that do not reflect the activity of the division also take into calculation. Right? The divisional profit එක ගන්නකොට ඇත්තටම head office එකක් allocation එකක් divisional profit. But when it comes to the management performance, only based on items that are come under the control. ඕක තමයි මෙතන focus කරන එක. Performance evaluation of the divisional managers. So both revenue and cost, which can be controlled by one particular level of management. So when assessing the managerial performance, divisional results first have to be adjusted to reflect the traceable items, then further adjusted to reflect the controllable items. Again, අපි ගත්තොත් diagram එකේ තියෙනවා. Normally, now for the divisional managerial performance, you consider the controllable profit. The controllable profit is the controllable revenue minus controllable the divisional cost. හැබැයි අපි division එකේ profit එක හොයද්දී okay. Traceable divisional cost also deduct. In my example, take a branch. Branch generate a revenue of, say, during a month they have generated revenue of 5 million rupees. And the controllable cost to that particular branch manager, you have identified 3 million. So the controllable profit is 2 million. Right? Controllable profit. In calculating this controllable profit, monthly rent of the branch building 1 million you have it. Because it is not controlled. But when you come to the traceable profit, you have to allocate the traceable divisional cost, that 1 million also. Right? So from the 2 million profit, controllable divisional profit, you deduct another 1 million. The rent, the traceable cost. So the traceable divisional profit become branch profit 1 million. 5 million sales revenue, controllable cost 3 million. Controllable profit 2 million. Then the traceable divisional cost like rent 1 million deduct. So you have a 1 million profit, that is the traceable divisional cost. Then there are some head office expenses you can have to allocate among all the branches. Right? So when you allocate, another 200,000 will be allocated there. That is the apportionment to the head office cost 200,000. So net profit of the branch given 800,000. Now, if you are given the net profit of a branch 800,000, then you have other information. You better add back that head office 200,000 allocated cost and 1 million traceable cost. Then only you can come back to the 2 million controllable profit. So the here all format එක මතක තියෙන්න ඕනේ. එතකොට අවශ්‍ය adjustment එක කරලා controllable profit එක හොයාගන්න. Right? අපි ගානක කෙලින්ම controllable revenue and controllable divisional cost එක දීලා තියෙනවනේ එතනින්ම ගන්න පුළුවන්. එහෙනම් නැත්නම් අපිට profit එක දෙන්න පුළුවන්. branch එකේ profit එක. ඒ අතරේ දීලා තියෙනවා traceable head office overhead cost allocated apportion to the branch. And you are given some information that the cost traceable to the branch but not come under the control. All that deducted in this net profit. Then you have to add back. Identify the controllable profit. So in management performance evaluation, you have to consider only the cost and revenue, both controllable by the manager. Right. Here we have an activity. Division X is a part of Colombo company, part of control company, both based on X land, where the currency is X dollar, right? Country division X control company ke division part of the control company. ඒක තියෙන්නේ X land එකේ currency එක X dollar. Division X profit center export all product to Y land where currency is Y pound. අපි dollars and pounds කියලා ගමු. Right? එකක currency එක dollars අනිත් එක pound. X division's cost are all incurred by dollars. Division X customers are invoiced in pound. X division එක ඔක්කොම export කරනවා Y land. ඒකට costing එක කරන්නේ dollars වලින්. ඒ invoice වෙන්නේ pound. Right. In 2018, head office at control company invested in e-commerce platform, which significantly increased the efficiency of the division. At the beginning of the final quarter, the value of X dollar fell by 8%. Again, exchange rate. Dollar to pound. Right? So the dollar like a decrease value එක 100%. Right? The rupee depreciation given. Dollar value to the pound remain the same level the rest of the year. Right? We have X land and Y land. The currency X dollar, currency Y pound. Right? So all the products are exported with a division X. X land division X second. Right? X division is the X land, Y division is the Y land. Right? Then exchange rate එක ගත්තාම මේ dollar rate එක අඩු වෙලා තියෙනවා 8% beginning of the first quarter. 8% අඩු වෙලා තියෙන්නේ quarter 4 වල විතර. Right? Beginning of the final quarter remains same. Right? So at the beginning of the final quarter, X dollar fell by 8% and remained the same level for the rest of the year. The manage of division X is currently appraised on the net profit margin of the division and awarded a large bonus if exceeds 7% per year. Target profit එක තියෙන්නේ. Target profit එක 7%. Net profit margin එකක් තියෙනවා. So if the manager gets the 7%, he will receive a huge bonus. The manager division has complained that net profit margin target is not sustainable in appraising her performance. So එයා කියනවා මේක සාධාරණ නැහැ කියලා. Recommend using appropriate calculation අපිට calculation එක දීලා තියෙනවා. revenue එක තියෙනවා. Cost of sales, gross profit, depreciation, the allocation of the overhead cost, other overhead, net profit. Net profit margin දැන් ඇවිල්ලා තියෙන්නේ 5.5. So the manager not met the target. So he's not entitled for the bonus. That's why I complain. Right? Profit set එක. Revenue occurred evenly throughout the financial year. Now you should come up with some calculation and support, or you can say that okay, no, this 5.5 is correct. or even with the adjustment when you calculate, it is less than 7, so it's not 8 times. Right? Manager is not 8 times. Or you can come up with calculations and identify the net profit margin based on the controllable profit. Controllable profit. How much based on that you have to come, you have to come up with the conclusion. Now in the revenue, do we need any adjustment? Revenue, do we need any adjustment? Like Lanka kita Lanka export කරනවා. Rupees වලින් revenue එකක් ගන්න. හැබැයි invoice කරන්නේ අපිට dollars වලින්. ඒ exchange rate එක rupee එක depreciate වුණාම මොකද වෙන්නේ? Rupee revenue එක වැඩි වෙනවා. දැන් අන්න එහෙම වැඩක් මෙතන වෙලා තියෙනවා, right? The revenue in X dollar 1000. X dollar depreciate by 8% in the final part. And there is an impact of dollar depreciation relative to the pound. Right? So the real revenue for the management performance evaluation, you can't use the 2000. The Lanka, right? Business or profit take export business or profit take a business they gain to exchange rate take fluctuate, the rupee depreciate, the rupee revenue increases. So within the companies, when you have several divisions, when you are evaluating performance, they have to make this adjustment. Otherwise, right, those managers get a huge reward, right? Actually, they have not done anything regarding that. So here also we have to consider that. So when you consider, first what we can do, we can have the currency gain included. Now 2000 is the profit, no? 2000 is the revenue. 2000 revenue. You have to divide 500, 500, 500, 500. 4. Right? 4, 500. The last quarter 500. Equally right? But last quarter 500 is with this 8% impact. Then 500 divided by 1.08. When you remove that 8% increase, the real revenue is 463. 460. Because 500 with the 8% depreciation of the currency. So when you remove that impact, it should be 463. That means there's a currency gain of 37 included within this 2000. Right? Currency gain, exchange gain. So you have to remove. In other words, the controllable revenue is 1963. Is that clear? We take the controllable revenue to the business. 2000, right? I put 2000 8% there because it is clearly mentioned. This foreign the exchange rate decrease occurred beginning of the final quarter and remain constant throughout the quarter. So it's effect for only 3 months. Right? So that is why we take 500 into 4. So last quarter 500 divided by 1.08. So it is 463. Right. Cost. Out of these costs, there are 2 uncontrollable costs. What are those? 2 uncontrollable costs. This is the profit center. So managers are responsible for the revenue and cost, but they are not responsible for the asset. The depreciation is based on asset, so which should not be considered in evaluating the performance of this particular manager. And the allocation of head office overhead. is not controllable to the divisional manager. So that 190 should be removed. Right? එහෙනම් අපි ගන්නවා reported net profit එකකින් පටන් ගන්න පුළුවන්. Reported net profit 110 තියෙනවා. So the 110 reported net profit, you can add back the depreciation and allocation of head office cost. And you can deduct the 37 currency given. Right? So then the controllable profit is 263. Right? You can take down. If you want. Then the controllable revenue is 1963. So the controllable net profit margin 263 divided by 1963. So the based on that, the real profit margin, net profit margin is 13.4. Now the manager's argument is correct. He has exceeded the 7% target. Right? By considering the non-controllable profit as well as non-controllable expenses, so the net profit, calculated net profit and the profit margin 5.5 at the moment given, and then legally got 5.5. 5.5 is not accurate. Okay. That is the argument from for the managers support the manager that he is entitled, he or she is entitled for the bonus because it exceeds the 7%. You consider the controllable. Clear? Now, ඔකට විරුද්ධව දෙන්න පුළුවන් argument එක. There is only one concern from the top management perspective. They can say, right, this is true. However, now there is a statement saying the original question. It says activity. During the 2018, head office invested in a new e-commerce platform which significantly increased the efficiency of the division. That is, head office incurred this e-commerce platform, invested in the e-commerce platform. As a result, the efficiency increases. Now they invest in the system, that increases the revenue. Right? Based on that argument, they can argue that this allocation of head office overhead is okay. Right? In that case, you can again recheck. Even that part is adjusted, right? Even though it is not controllable by the managers, but the revenue perspective, that revenue has increases because of this head office action. So as a since we cannot take separately revenue, how much generate from this new e-commerce platform, right? One can argue, okay, so this allocation of head office should be relevant in that, right? ආමාර්ගත්වයට මේ argument එක තමයි එන්නේ, right? මේක හරි. But this is undergraduate level, right? Practically, these are some concerns, right, from the top management. They can come up with that argument, right? Your divisional revenue increases because of our e-commerce system. So it is appropriate allocating the overhead cost of head office. So they just take in that concern, you take now this profit 267, 263. From that you have reduced 90. Divide by 1963. Now still the manager net profit margin become 8.8 in that case. Still the manager is entitled, it is above 7%. Right? So you can support with the manager's argument. Then we discussed about investment centers. Investment centers performance evaluation, we can use these three main methods: return on investment, residual income, and economic value added. So we'll look at the calculation of these techniques, right? The return on investment. Make up of return on capital employed, right? So where the controllable divisional profit divided by the divisional investment. The division's total asset. Controllable divisional profit divided by the total asset of the division. Divisional investment. The ROI, return on investment. It's simple, right? Calculation is not very complicated. You know the controllable divisional profit as we discussed in the previous one. And you have to take the divisional investment. Total investment in the division. So the return on investment is another term used to return on capital employed. The basic calculations. So in the previous slide you see that. Here also we take the controllable profit. So that controllable profit, you have to consider the expenses which are come under the control of the management. Revenue also, which can be controlled by the manager. There may be aspects of investment base that is not controllable at divisional level. If so, this should be excluded calculating the ROI. For example, if a credit control is head office function, then receivables should be excluded from divisional investment base. Again, total asset එක අපි හිතමු අපේ branch එකක් තියෙනවා, you are responsible for generating the sales with the cash or credit, and you have a separate division of recovery. The banks වගේ ගත්තොත් loan division එක වෙනයි, recovery division එක වෙනයි. එතකොට loan division එකේ performance measure කරද්දී recovery එකේ bad debts එනවා, that should not be considered. If there is an investment center, right? The investment center ekedi you are taking the total asset. Return on total asset, divisional asset, capital employed. Then you can set a trade receivable. But if the trade receivable is not come under controllable of this particular division, that should be excluded. Right? Can be, right? So the return on investment normally compared with the return on investment target for the last year return on investment. Common division the ROI target, budget ROI, and you can compare with the last year with the increase of return on investment. Right. Dysfunctional behavior of the return on investment will take after looking at the residual income, right? Return on investment return on investment used as a principal performance measure. Then it's likely that manager will take only decisions that will increase the divisional ROI, which may at the expense of growth corporate profit. You can profit center. Grow a very divisional ROI. But a negative whenever managers undertake proper unblock. Simple example. Right? You are an investment center. The manager find a new business opportunity, new project. You evaluate the project. Positive NP. Right? When you invest 10 million, you can have a 2 million profit within 5 years. Right? So positive NPV project. When you consider the organization wise, it is worthwhile to accept the project. But then you calculate the expected profit, right? ARR calculation, you expect the profit calculation. This project will generate more cash flows from the third and fourth years. So initial first and second years, the less profit, less cash flows, less profit. As a result, if you accept this project, now your investment increases. Right? Your return is at the moment this particular division having say 15% ROI. Last year 15%. Right? Say 2022, 15% ROI.
Excuse me, sir.
Yes.
Sir, we can't see anything that you are right on the board. If possible, can you use the digital board, sir?
So many minor things. Right?
If you could check with the IT team, sir, because I saw some video that uploaded to LMS, like some other batch lectures, they are using whiteboard to
They have set this for key. Otherwise, the display and they require. Yes. Okay, so basically, what I use that, okay, we have 15% 2022 ROI, right? They recorded ROI 2022 15%. Now with this 100 million investment, right? You have a 20 million NPV. So 20 million NPV means that it's a corporate-wise, company-wise, the project should be accepted. But when you calculate the ROI in the 2023, now if you undertake this project, the the assets of the division increases, and it generates more profit only in the third and fourth year if it's 5-year project. What will happen that by 100 million your investment increase, but you are not getting 15% profit in this year. Assume that first year profit is only 5. For 100 million, you are getting 5. So this project ROI is 5%. Then what will happen to the overall ROI? This will drop to something like 14%, 13% like that. So as a result, manager discouraged, right, to accept a worthwhile project. Project is actually worthwhile, but manager may not accept the project because that will adversely affect their performance. Manager knows that how to calculate the ROI of the division. So divisional ROI will be calculated by considering that profit of the division on this particular year. So they may be able to meet the target 15% or even maybe 16% without this. But because of this, now it will become 14%. So that will act as a barrier, right? So that is one aspect of dysfunctional behavior of ROI. Right. So the new projects that have immediate impact on the divisional asset but may increase the profit over the time. The current ROI may be artificially high because division has undiversified in the recent year. Right? So at the moment, you are operating in a very small area, right? So you are having a very high ROI. But there are more business opportunities, project you can diversify. Those projects also will bring some positive NPV again. Right? The one other divisional manager would like to accept the risk and diversify, but this particular manager, another divisional manager will focus on ROI. You are at the relatively, say, blue ocean, right? So no much competition, reasonable ROI. You are happy with that, so you will not accept. So as a result, the overall, the corporate will suffer. So there is another method, another measurement basis we can use to measure the divisional performance of investment centers. There we consider residual income, absolute residual income. Right? Residual income is not a percentage. You take the controllable divisional profit. From that, you deduct the capital charges. So we call imputed interest. Interest for investment, cost of capital multiplied by the investment, divisional income. Now then what happened, if you consider the previous scenario, now there is a project with 100 million NPV, 100 million investment or 10 million investment, what we consider 10 million investment, 2 million profit, or 100 million investment, 20 million profit, whatever. So when you have positive NPV means, basically, your return is above the cost of capital, right? So then, when you deduct the cost of capital, even this new project cost of capital is less relative to the cash flows. So as a result, there will be a marginal increase in the residual income when you accept in a new project. Then we residual income make a value of controllable profit taker, right? Alu project taker. And the imputed interest will not increase by the same amount. So as a result, there will be a marginal increase in the residual income. So as a result, even in that case, positive NPV project will be undertaken if the manager is evaluated based on residual income. Residual income based කරගත්තොත් ROI වෙනකොට අර වගේ projects අතාරින්නේ නැහැ. Right? මොකද ඒකේ positive impact එක ගන්න. Right? The positive impact take into consideration. Right. This is how we should calculate. ROI is less likely than the residual income is less likely than ROI to encourage this functional behavior and it's encourage the investment. However, this functional behavior may still occur if a new project have immediate impact on the asset, but only increase profit over the time. මෙතනත් capital එක ගොඩාක් වැඩි වෙලා profit එක එන්නේ පස්සේ නම් ගොඩාක්. එතකොට even that we are adjusting the capital charges, that is the imputed interest, ඒකේ එන්න පුළුවන් සමහරවිට negative impact එක. Right. There are some advantages and disadvantages of ROI and residual income. I will come to that after activity. So we'll take the next one, value, economic value added. Right. Another concept, we have economic value added. The economic value added is calculated net operating profit after tax. Net operating profit after tax. Less capital charges. So, make a residual income residual income controllable profit divided by imputed interest. Imputed interest investment multiplied by weighted average cost of capital. Controllable profit net operating profit after tax. So, adjustment keep controllable profit but at net operating profit after tax, less the capital charges. Capital charges is weighted average cost of capital, net asset at start of the period. Right? Period RMP net asset, investment data, multiplied by weighted average cost of capital. Right. So economic value added is the primary, the logic behind economic value added is the primary objective of organization is to maximize the shareholders' wealth. Then the performance measure should evaluate whether organization has added economic value by making economic profit in excess of the return required from the capital. Net operating profit after tax economic value create. And then capital charges required rate of return investors. Right? Economic profit focus. When the economic profit calculate the selected characteristic method, summarize method. So basically, when you have the profit after tax, to convert it into net operating profit after tax, we can take the profit after tax and add back non-cash expenses like goodwill amortization, depreciation, right? Provisions, they add back non-cash. Especially, we are adding back research and development and advertising, whether those are incurred by cash. Because research and development will create value to the business in the long run. Advertising also, effective advertising create a good brand image, right? You can promote your product, you can position your product with the customers, that will generate benefit over the long term. So we are adding back those. Today, net operating profit after tax. Net operating profit after tax after tax profit add back depreciation, intangible asset like goodwill amortization, other non-cash items like provisions, and R&D and advertising. Add back net operating profit after tax, right? Make profit before interest and tax, so adjustment right? Before interest after tax. Profit before interest and tax, EBIT, right? Etana base right? But we'll focus on this part, first approach, right? First approach. Right. Have an activity. Go to that page. So B division of X Limited has operating profit and asset for year ended 31st December 2015, right? Operating profit 156, less non-cash expense, amortization of goodwill, interest at 10%. We have profit before tax, 128. 30% tax, profit after tax 89.6. Total equity 350, long-term debt 150. So total capital employed 500. It has a target capital structure 25% debt and 75% equity. Cost of equity is estimated at 15%. Capital employed at the beginning of the year, no 7. Goodwill previously written off against the reserve on acquisition in the previous years 40,000. In a Kali price of the goodwill, you know, 40,000. Calculate economic value added and residual income. I hope you have the slides with you. You ask to calculate the economic value added and residual income. Remember what is net operating profit after tax is needed. Net operating profit after tax to calculate economic value. Economic value වන්න පාරට ඉස්සරලාම net operating profit after tax හොයාගන්න. Profit after tax දීලා තියෙනවා. ඒකේ කාලට පුළුවන් net operating profit after tax හොයන්න. Here you can use the first approach, profit after tax. Add back the goodwill amortized, R&D, non-cash, depreciation, interest. Net operating profit after tax. So what is the after tax profit? 89.6. You can start with that. Right? 89.6. So 89.6 sort of add back කරන්න තියෙනවා non-cash expenses like provision, the goodwill amortization, and එකක් තියෙනවා මේ තියෙන්නේ 16 interest this is total interest. හැබැයි අපි ගන්නේ after tax නේ. Interest is a tax deductible expense. එතන interest ගන්න ඕන අපි අර 1 minus t. right? ඒක interest එක ගන්න ඕනේ not the 50. ඒකේ 30% tax effect එකක් තියෙනවා. So අපි add back කරන්නේ only 70% of the income. Interest is a tax deductible expense. Right? ඒ නිසා interest එක සාමාන්‍යයෙන් අපි add back කරනකොට interest එක අපි ගන්නවා 70%. For the interest එකේ 30% operating profit එක ඇතුලේ interest තියෙන්න බෑ. right? ඔයගොල්ලෝ ඉගෙනගෙන ඉති ROA හොයනකොට අපි අර profit එකට add back කරන්නේ interest 1 minus tax. right? ඒ බේස් එකේ තමයි යන්නේ. The interest net of tax. Non-cash expenses provision, amortization of goodwill, ඒවා tax effect එකක් නෑ සාමාන්‍යයෙන් non-cash expense. right? ඒක full amount එක අපිට net profit එකට add back කරන්න පුළුවන්. So we take 130.1. The alternative approach එකකුත් හදලා තියෙනවා. right? I am not focusing on that. මොකද මම focus කරන්නේ පළවෙනි approach. right? එකක් තියෙනවා නම් okay. ඒකම EDIT වලට EDIT හොයාගෙන ඒකෙන් ආපහු add back කරලා තියෙනවා. right? But first one is more clear. You have the after tax profit. For that you add back these non-cash expenses like provision, amortization. The non-cash expense කියලා පොදුවේ තියෙනවා. So depreciation උත් තියෙන්න පුළුවන් සමහර වෙලාවට. Right? නැත්නම් වෙනම depreciation තිබිලා වෙනම provision non-cash තිබ්බොත් depreciation also need to be add back. Right? මේ activity එකේ depreciation වෙනම දීලා නැහැ. Right? But it can be given separate depreciation. And the other non-cash expense like provision. Right? Then both should be added. The interest net of tax should be added. Then you get the net operating profit after tax. Right? Operating profit after tax. Economic value added එකට අපි economic value added එක හොයද්දී formula එක තමයි net operating profit after tax minus capital charge. Capital charges is the weighted average cost of capital into net asset at beginning of the period. Right? Then 130 වලින් අඩු කරන්න ඕනේ capital charge. Economic value added. The capital charges ගන්න අපි යනවා right. What is the beginning of the year net asset? අපිට equity එක දීලා තියෙනවා 470 කියලා ගන්න. හැබැයි අපිට කියනවා previously write off goodwill එකක් තියෙනවා amortized goodwill. ඒක add back කරන්න ඕනේ. මොකද දැන් මේ amortization එක අපි ignore කරනවා operating profit එකකින්. right? Goodwill amortization. ඒ නිසා previously amortized goodwill එකක් අපිට දීලා තියෙනවා ඒකත් add back කරනවා. අරනේ. So altogether it is 510. ඊළඟට දැන් weighted average cost of capital එක බලන්න ඕනේ. අපිට කියනවා they have a budgeted standard capital structure is 75% equity to 25% debt. And cost of equity 15% කියලා ගන්න දීලා තියෙනවා. එහෙනම් අපි weighted average එක අපි ගන්නවා right. 15% is multiplied by 0.75 75%. Interest එක 10% interest එකක් තියෙන්නේ right percentage එකක් විදිහට interest 10% into ඒක tax effect එක කරනවා 7% net of tax ඔයගොල්ලෝ finance වල ඉගෙන ගන්නවනේ interest එක cost of debt ගන්නකොට net of tax ගන්න. එතකොට interest rate එක 10% into 7% නැත්නම් 0.7 7% එන්නේ. ඒක 25%. Here the target capital structure last paragraph 25% debt to 75% equity. Cost of equity estimated 15%. Capital employed at the start of the year 470. Goodwill previous write off 40. So previous write off goodwill එකත් add back කරාම අපිට ගන්න පුළුවන් right. Capital employed beginning 510 කියලා. ඒකට apply කරන්න ඕනේ. Weighted average cost of capital. Weighted average cost of capital එක අපි ගන්නේ 2575 capital structure එකේ target capital structure එක ගන්නවා. So you multiply cost of equity 15% into 75%. Cost of debt 10% into 70% or the 0.7 net of tax 25%. Right? Percentage එකක් විතර ගන්නවා නම් 11.25 1.75 ඔක්කොම 13% or 0.13. right. දැන් එහෙනම් අපිට පුළුවන් ඔය දෙක දිනනවා කියන්නේ you can have the economic value added easily. Economic value added is here you get the economic value added. Net operating profit after tax we have already calculated 113.1. ඒකෙන් අඩු කරන්න ඕනේ weighted average cost of capital 13% into capital employed beginning of the year 510 into 13% 66.3. When you deduct it, economic value added is 46.8. Right? Net operating as profit after tax we have already calculated 113.1. Right? මේ 30% ආපෙදී ආපු මේ උඩ දාලා තියෙන්නේ. That is weighted average cost of capital 13% multiplied by the capital employed beginning of the year. Net asset beginning of the year 510. So 66.3. 66.3. Residual income කොහොමද හොයන්නේ? Residual income controllable profit less imputed interest. ඔක තමයි අපේ formula. Controllable profit. How do you get the controllable profit? Controllable profit දැන් මේ ගානට අනුව නම් controllable profit කියලා අපිට ගන්න වෙන්නේ. Right? අපිට තියෙනවා before tax profit 128. Tax is uncontrollable to the division. The tax එක ගන්න බෑ. Right? Operating profit එක ගන්න. ඊට පස්සේ you can have the you can extract 15 interest. Interest එකත් controllable නේ. Right? Interest is not controllable. Then goodwill එක division එකේ තියෙනවා කියන්නේ ඒක division එකේ goodwill එක. එතකොට ඒක අපිට ගන්න පුළුවන් division එකේ controllable එක. මොකද ඒක division එකට අදාළ goodwill එක. Not cash අනිත් expenses division එකේ. Right? ඒ නිසා මෙතන කරගෙන තියෙන්නේ ඇත්තටම මෙතන අරන් තියෙනවානේ 143 අරන් තියෙන්නේ මේ formula එක. Profit before interest and tax. What is profit before interest and tax? We have 128 profit before tax to expect the interest. Right? මේක ටික සබ්ජෙක්ටිව් අපිට අර අනිත් ඒවා ගැන කොච්චර කන්ට්‍රෝලබල්ද නැද්ද කියලා නෑ අපිට. හැබැයි අපි දන්නවා මේ 143 කොහොමද 143 වලට වඩා වැඩි නිසා අඩු නෑ කන්ට්‍රෝලබල්. Right? Because tax you have to add back. Interest you have to add. Those are anyway not controllable by the division. Right? Got it? So, based on this given information, we take profit before interest and 143 as the controllable profit. එක පිට සමාන වෙන්නත් පුළුවන් පිට වඩා වැඩි වෙන්නත් පුළුවන්. In other expenses තව මොනවා හරි non controllable තියෙනවනේ ඒකත් add back කරන්න. Right? At least for the after tax profit you need to add back interest and tax. So that is 143. ඔන්නවට ඒක ආපෙඩි වා ගන්න පුළුවන් after tax profit එක දීලා තියෙනවා before tax profit එක දීලා තියෙනවා. ඒකට interest එක add කරලා තියෙනවා. නැත්නම් after tax profit එකේ යනවා නම් ඒකට interest එකත් add back කරලා tax එකත් add back කරනවා. Right? දැන් capital charges ගන්නකොට මෙතනදී අර මේ opening equity කතාව නැහැ. Imputed interest කියන එකේදී අපි ගන්නෙ investment into cost of capital. Right? Cost of capital 13%. Investment එක ගානේ දීලා තියෙනවා. ආසන්නෙන් යනවා debt plus equity 500. Right? මේකේදී opening equity හොයාගන්න යන්නේ නැහැ. Opening net investment හොයාගන්න යන්නේ නැහැ. Right? Total investment debt plus equity capital employed. The capital employed total be 500. මේ ගානේ පොඩි මේ දෙක වෙනස් කරලා අඳුන ගන්න figures දෙක වෙනස් කරලා තියෙනවා small. Right? The capital employed is equity plus debt multiplied by 13%. ඉතින් කවුරු හරි 510 ගත්තත් ලොකු ගැටලුවක් නැහැ. Right? එකම approach එකේ යන්නත් පුළුවන් 510. මොකද ඒක හැබැයි opening එක. Right? මෙතන තියෙන්නේ year end එක value එක දැන් දීලා තියෙනවා. Right? එතන අපිට මේකේ විශේෂයෙන් කියලා නැත්නම් අපිට year end එක ගන්න පුළුවන්. Right? ඉන්ටරෙස්ට් එක අපි ගන්නවා මේ තියෙන capital net equity එක 350 plus 150 500. So 500 into 13%. Interest. So to deduct it, it is 78. Okay, right. So we take a short break and we'll continue after the break. More on this return on investment and dual income and economic value added.
Question miles, but please move.
In practice, return on investment is used more frequently than ROI. Than residual income. But residual income is technically superior. If you take the advantage of residual income versus ROI, the higher risk of dysfunctional behavior is ROI than residual income. Okay, managers la positive NPV project එක විදිහට කරන්න පුළුවන් ROI මත evaluate කරලා ඒ chance එක වැඩි residual income එකට එනවට වඩා. ROI is more flexible since different cost of capital can be applied to evaluate the different divisions with different risk characteristics. Now, return on investment, you just take the controllable profit divided by investment. There we do not consider the risk factor of these different divisions. But in the residual income, we take controllable profit minus imputed interest that is based on the cost of capital. Right? So when the different divisions are exposed to different risks, the cost of capital varies. That take into consideration in the ROI. In the residual income. Weakness of residual income compared with the ROI, it does not facilitate the comparison between the divisions in the different sizes. The absolute value, return on investment, relative percentage. So you can compare divisions irrespective of the size. But residual income has its absolute value. Right? From the controllable profit, you deduct the imputed interest. If one division is very large, other one small, you can't make it compare from the residual income. Only similar size of divisions can be compared. Then it is difficult to decide appropriate and accurate measure of capital employed to which the base of imputed interest is charged. Right? Imputed interest is charged කරන්න division එකට අදාළ වෙන capital base එක හොයා ගැනීම ROI වලට සාපේක්ෂව අමාරු වෙන්න පුළුවන්. So the ROI is more popular, right? එකක් තමයි අපි සාමාන්‍යයෙන් company එකක performance බලනකොට overall entity we use the word return on capital employed කියන entity. Same thing return on investment. So it is consistent with the measuring of the whole entity performance and divisional performance. Ratios are more easy to understand, right? So normally people can easily understand these ratios. The cost of capital more appropriate is comparing division different sizes. ඊළඟ එක තමයි මේ ratios use කරාම අපිට you can ignore that the size effect of the different divisions. And calculating residual income එක subjective වෙන්න පුළුවන් අර cost of capital එක ගන්න දැනදී. අනිත් එක තමයි දැන් ROI even though it has the dysfunctional behavior, you don't solely take the decision based on ROI. Practically nowadays, you consider some other non-financial factors, other aspects also like balance scorecard techniques, whatever. Use ROI මතම reject වෙන්නේ නැහැ, right? ඒ නිසා ඒක අපිට ROI හොඳයි කියන්න පුළුවන්. Right. Then the problems with ROI, when it comes to profit calculation, the need to be adjusted to reflect controllable and traceable items. And the transfer prices and quantities may be imposed to set the non-commercial rates and ignore the tax. ඔය වගේ දේවල් තියෙනවා මේකේ. අනිත් එක තමයි මේකෙන් overstate කරලා පෙන්නනවා එක්තරා අතුලක. Right? Division එකේ profit එක figure එක විදිහට ගත්තාම comparison wise you can use it, But when you take the controllable profit, you leave out the interest, you leave out the depreciation, right? Other non-controllable expenses, or local profit take up, local rate take up, right? Than the actual. So that can be useful for the performance evaluation of the different divisions, but that may give some kind of misleading. First, the manager is right, market division take a measure profit, say high, visible high, right? But our expenses, what's up, ignore karla. So you should know that is used only for comparing the performance of different level of managers. Right. So then we can move to the economic value added. We can have these economic value added advantages and disadvantages. So the advantages return in line with the shareholders' expectation, therefore align with the wealth maximization. Economic value added එකේදී බොහෝ දුරට එන්නේ අර NPV වගේ value එකක්. Operating profit after tax minus capital charges කිව්වා. Right? Operating profit net operating after tax වගේ non cash ඒවා add back වෙනවා. ඒක cash flow වගේ. Right? අනිත් පැත්තට interest එක අඩු වෙනවා expected rate of return. Right? Required rate of return of investment. So it is more aligned with the shareholders' wealth maximization objective. And replace the multiple goal with one financial measure that can use at all levels of decision making, and encourage the expenditure in the area that create benefit in the long run. Make it advertising, R&D and factor. Because of that, the divisions, the divisional managers more encouraged to engage in R&D and advertising, which will create long run benefit. Right? Traditional financial accounting profit take that, that they may discourage even engage in the R&D wise. If you are going to evaluate the performance based on the net profit or the operating profit, right? But using this economic value addition, that can be done. ඊළඟට දැන් අර depreciation වගේ ඒවා amortization add back කරනවා කියන්නේ remove the distortion from the accounting policies, the estimates, the policies වලින් එන non-cash expenses means basically accounting policy impact, policies estimates impact. Since we are impacted, so that economic value added calculation subjectiveness is less. So consistent with the NPV. Disadvantage are complex adjustment required, so many adjustments, and historical data still we are using, right? Historical and absolute measure, but not a relative figure, right? Net operating profit after tax minus the capital charge. And inconsistent with the publicly available published financial accounting figures actually figure. Right. Now we are moving to the next topic, the transfer pricing. So the decision to create divisions often create the need for transfer price to agree between the divisions for goods and services provided by each other. Because I told you that in overhead absorption, we take the factory 1 and factory 2 as cost centers. But when it comes to the performance evaluation, right, factory 1 and factory 2 should be the profit centers because they not directly generate the profit. They are incurring some cost. Part of the product completed in the factory 1, transferred to factory 2, factory 2 completed and transferred to selling division. When you are evaluating the two divisions' performance, you need to identify the profit generated from each division. To identify that, you need to set a transfer price for the product transferred from factory 1 to factory 2 and factory 2 sales division. Otherwise, it is unfair. The entire profit is transferred to sales division. Right? If you are transferring it at cost, the manufacturing cost, right? So you transfer that to the sales division. So sales division recorded the profit. So that is unfair from the managers of the factory 1 and factory 2 who actually contribute, create value to the business, which may not be recognized. Right? So in that case, we need to use a transfer price. Transfer price. But setting transfer price is not that easy. Like, you have to set a transfer price that should properly evaluate, that should help to evaluate the performance of each division, factory 1, factory 2 properly. The same time, both factory 1 managers and factory 2 managers should be motivated. One should not be demotivated, should be fair for work. And ultimately, it should help to achieve the overall organization objective, that is the wealth maximization. Right? So when we discuss the transfer price, we will identify that there are some issues, some problems in setting the transfer price. So transfer price is the price at which goods and services are transferred from one division to another within the organization. Right? One division practically maybe separate entities. Now, group of company, we have subsidiaries. One do the manufacturing of one component, transfer it to the other company, maybe separate legal entity, but within the same group. The other one have to do the sales. Right? So in that case, you have to have the transfer price. You know that multinational companies, they have the production in one country, right? So they do the production, sometimes partly completed one, transfer to another one, based on tax benefit and all that. They might have, then finally the finished product is transferred to some other country, and that country do the sales and marketing. Right? So those are dependently operated. So you have to set a very reasonable transfer price to keep all these entities a reasonable profit. The transfer price is a very critical decision. Right? The critical will have a long run consequences if you don't set a proper transfer price. Right? ඒක වැරදියට transfer price එක තීරණය කළොත් මේකේ එනවා ලොකු adverse impact එකක් සමස්තයක් විදිහට business එකට performance evaluation වලින් පටන් ගත්තාම ඒකෙන් එන impact එක, right? Managers may be demotivated sometimes if it is not fairly designed, and sometimes managers may take some actions that will cost to the entity as a whole. Right? සමස්ත ආයතනයේ විදිහට ගත්තාම මේක ආයතනයට cost එකක්. To show a higher performance from the division, their division. Right. So need for transfer pricing. When where there are transfer of goods and service between divisions, the transfer could be made free or as a favor to the division receiving the benefit. For example, car dealership has two divisions, one car repair and service, the other car sale. The service division also requires service cars before they are sold and delivered to customers. In the absence of transfer pricing system, service division could do the work for car sales division without making any record of the work done. That means there's a car sale. Have another division, repair and service. Before selling a car, right? Normally you do a service and fully service vehicle is sold. Right? So that service repair division, they do a service of the vehicle before sale. If no transfer pricing take place, small organization, so they do it. So there it won't be any record about the vehicle services by that service division before sale. Right? So that is not recognized in that case. So it is necessary for the control purpose. Some records of interdivisional service should be kept. And one way of doing that through accounting system. Interdivisional work can be given a cost or charge a transfer price. එතකොට ඒකට solution එකක් විදිහට අපිට පුළුවන් transfer price එකක් charge කරන්න. Returning to the illustration, the sales division and the repair divisions, of the car dealership unless the cost or value of service work performed of sales division is recorded. Management cannot keep proper check on the amount of resources being used to service. Then service center outside service. So if you are not having proper record of the service division that you have done for the cars before sale, right? You cannot even compare the cost. අපිට එක මාසෙක service division එකේ cost එක ඊළඟ මාසෙට වඩා ගොඩක් වැඩි. හැබැයි ගිය මාසයේ service කරපු වාහන ටිකම ඇවිල්ලා තියෙන්නේ එළියේ. වැඩි වෙලා තියෙන්නේ. මේ මාසේ වැඩිපුර අලුතෙන් වාහන විකුණලා තියෙනවා. ඒකම මේවා service කරනවා. So they are labor, material, right, electricity, those expenses. Okay. So for the control purpose, definitely you need to have a record. The record එකක් තියාගන්නකොට transfer pricing එක use කරන්න වෙනවා. Then the performance measurement. That's our main topic here. When you want to measure performance fairly among these divisions, you need to use the transfer pricing. So you need the transfer pricing to evaluate performance of divisions fairly. If the service division does not receive any credit for the work they does for the sales division, then the revenue and profitability understate. Right? ඒගොල්ලන්ගේ profit එක විදිහට වෙන්න අර එළියට service කරලා දෙන income එක විතරයි. But they are contributing to the sales division. That තමයි ඒක price කරන්නේ. Right? Transfer price එකකින් ඒකට revenue එකක් ඒගොල්ලෝ අඳුර ගන්න. Conversely, performance of the sales division is overstated. ඒගොල්ලෝ free of charge වාහනේ service කරලා දෙනවා. ඒකට ඒකට cost වෙන්නේ නැහැ. ඒක එළියෙන් කරා නම් ඒක යාගේ profit එක බලපන්. Now that is overstated. Therefore, transfer prices are required to prevent the performance of the two divisions. The divisions, example, sales division, service division. මේ දෙක fairly profit එක measure කරන්න නම් අපිට අනිවාර්යෙන් transfer pricing use කරන්න වෙනවා. The other aspect is to motivate the managers. The preventing disclosure of performance is this way should help to maintain the motivation of the divisional manager. For example, if sales division doesn't get any credit for the work it's done, it could be demotivate manager the sales division. Service division, right? The service division එක ඒගොල්ලන්ගේ job එකට කිසිම credit එකක් එයාට ලැබෙන්නේ නැත්තම්, right? The service division, right? එතකොට ඒ service division එක doesn't get any credit. අපිට selling division කියන්නේ පොදුවේ, right? Transfer කරන division එක. මේක නම් selling service division එකෙන් දෙනවා car sale කරන division, dealer. So if you are not recognizing the work performed by the service division, that will demotivate the managers of and the staff. Right? සමහර ආයතනවල එහෙම තියෙනවා. ඒගොල්ලන්ගේ work එක recognize කරන්නේ නැහැ. ඒගොල්ලෝ complain කරනවා. දැන් අපි මෙතන මෙච්චර contribution එකක් දෙනවා. හැබැයි අපිව evaluate වෙන්නේ නැහැ. ඔක්කොම profit එක යන්නේ අනිත් division එක. Right? That will demotivate. The transfer price take a motivate. It may also motivate repair and service division to do a poor job if they are not recognized. Okay, the only disadvantage is right. ඒගොල්ලෝ ඒකට මොකද කරන්නේ අර එළියෙන් එන වාහනේ හොඳට සර්විස් කරලා දෙනවා. හැබැයි sales division එකේ විකුණන වාහනේට එච්චර emphasis එකක් දාන්නේ නැහැ. So job එක poor. ඒකම අනිත් පැත්තෙන් complaints එකක් වෙන්න පුළුවන් company interest as a whole. ඒකෝ යාට කිසි benefit එකක් නැහැ, recognition එකක් නැහැ. ඒගොල්ලෝ ඒක කොහොම weak විදිහට poor විදිහට service කරලා දෙනවා. Compared with the service that they do for an external customer. Then those who purchase the vehicle, they won't be satisfied. එයාලා ගන්නවා බලන්න මේක හොඳට සර්විස් කරනවා නේද? ඇතුළේ දුවිලි තියෙනවා නේ. මොකද කාසෙල් එක වාහනයක් තියෙනකොට කාලයක් තිබුණා අනිවාර්යයෙන් විකුණනකොට ඒක හොඳ සර්විස් කරලා දෙන්න. right? සාමාන්‍යයෙන් එක සේල් එක තියනවා කියන්නේ ඉතින් දූවිලි පැත්තේ මාර්කට් එකේ කය ඇවිල්ලා ඇතුළට ගිහිල්ලා බලනවා ඇතුළේ වැලි අතර හොඳට සර්විස් කරලා තමයි සාමාන්‍යයෙන් සේල් එක වාහනයක් අලුතෙන් විකුණනවා. ඒක සාමාන්‍ය සේල්ස් කරන්නේ ඒගොල්ලන්ගේ නැත්තම් ඒගොල්ලෝ එළියෙන් සර්විස් කරගෙන ඇවිල්ලා තමයි වාහනේ හෑන්ඩ් ඕවර් කරන්නේ. right හොඳට පොඩි කොච්චයක් කරලා වැක්කියුම් එකක් කරලා right එළිය කරලා දෙන්න. මේ කියන්නේ මේගොල්ලන් වෙනම සර්විස් ඩිවිෂන් එකක් තියෙනවා ඒකේ වැඩේ කරලා දෙන්න. So if they are not recognized, if there is no transfer price and they do it free of charge, the more managers will be demotivated. As a result, they may not done a proper job. So that will adversely affect for the entire organization. That will damage the goodwill. The customers may not be satisfied with that. Likewise. So we can identify transfer price, the aim of transfer pricing. තමයි මේ goal congruence කියන එක. අරමුණු අතර එකඟතාවයක් තියෙන්න ඕනේ ආයතන. Right? No conflict. So that you can achieve it by proper transfer pricing, right? True cost of the each division if you can recognize, then all the divisions effort is recognized. That allow managers to retain autonomy. Transfer price එකක් තියෙනකොට ඒගොල්ලන්ට autonomy එකක් තියෙනවා. Right? Not forced for the internal transfer. Instead, allowing the division to decide whether to buy or from move outside or internal. And it helps to performance evaluation. Right. So here you have some this diagram explain. Right. Two divisions. Division is division R. Internal transfer එකක් වෙනවා මේ all competition. Cost incurred by division S තියෙනවා. And sales to intermediate product to externally. අපි તો මේ S දැන් හදන product එක externally විකුණන්න පුළුවන්. ඒ externally විකුණන්න පුළුවන් product එක තමයි R transfer කරන්නේ. Some may be, some may not be. Right? So if it is sold externally, right? So you have to consider those factors and decide the transfer price. On the other hand, receiving division R, now they are getting internally from S, and they have alternatively buy it from outside. Alternative suppliers also available to R. So R make the final product to the external customers and generate the revenue. So there should be a proper transfer price when goods are transferred from S to R. There are different approaches available for deciding the transfer price between S to R. Right. එකක් තමයි cost-based approaches. You decide the transfer price based on cost. The supplying division. ඒ කියන්නේ මේ උදාහරණේ යනවා නම් මම දෙකටම මේ කියනවා S තමයි supply කරන්නේ R තමයි receiving division. Right? S means by supplying division or the selling division, R is the receiving division. Right? So the supplying division has a cost of manufacturing and refining and may also allow to make up allow the markup encourage the transfer. Cost-based approach may necessary if there is no external market for the product we transfer. The external market එකක් නැත්නම් අපිට especially if we are transferring intermediate product like factory 1 to factory 2 partly completed is transferred. So there is no active market for the partly completed. You can't have the market price. So then transfer price can be determined based on cost plus market. Right? එතනදී actual cost එක නැත්නම් standard cost එක පාවිච්චි කරන්න පුළුවන්. and decide the transfer pricing. You can use either actual cost or standard cost. Standard cost means predetermined, budgeted cost. Normally, businesses use the standard predetermined planned cost. Why? If you take the actual cost, the all inefficiency of the supplying division will be included in the transfer price. ඒගොල්ලන්ගේ inefficiency එකක් නිසා cost එක වැඩි වුණොත් මොකද වෙන්නේ? transfer price එක වැඩි කරන්නේ. So all inefficiencies passed to the buying division. So there is no encouragement for cost control for the selling division if you are using the actual cost. Why? Say the company policy cost plus 20% markup to decide the price. So you set the standard cost is 500. At 20% markup 100, transfer price set as 600. So then, if the transfer price set as 600, irrespective of the actual cost incurred by the supplying division, the selling division is whether it is 480 or 520, transfer price is 600. So efficiency and inefficiency affect the profit of the division when you use the standard. Instead, if you say, okay, whatever the actual cost plus 20%. So you plan 500 plus 100, 600. Actually, this division cost increased to 550. So now you add 20% up to that 110, and your transfer price decided as 660. So that because of the inefficiency, they record a higher profit. And the receiving division, now their cost has increased. The other thing is, when you are using the actual price, the receiving division doesn't know what is the price in advance. So that will vary based on the actual. But if you are using the standard cost that is 500 plus 20%. So transfer price based on standard cost, it is 600. So they know it in advance. And that is easy for the receiving division planning. So you can, that is why the actual cost is not very much used. The standard costing, budgeted cost is used. So the selling division should transfer goods to buying division at the marginal cost of the production. If the selling has a spare capacity, as the marginal cost reflect the cost of company of the transfer taking place, then capacity එකක් අපි හිතමු selling division එකට extra capacity එකක් තියෙනවා. ඒගොල්ලෝ එළියට හදලා විකුණනවා මේ component එක. Right? හැබැයි අපේව තව division එකක් තියෙනවා ඒගොල්ලෝ internally ඉල්ලනවා. ඉල්ලන්නේ දැන් අපි මේ externally හදන එක. Right? Whether that you are supplying that or not, most cost anyway you have to incur, and you are generating revenue from external sales. In such a situation, you can set the transfer price internally based on the marginal cost. Variable cost එක base කරලා transfer price set කරන්න, that is more fair. Right? දැන් spare capacity තියෙන වෙලාවට ඒක සල්ගියට ගන්න වෙනවා. It has no external market, should operate as a cost center. So if S is a profit center, it will be demotivated as fixed cost will not be covered. ඒ කියන්නේ එතනදී දැන් X profit center එකක් විදියට කටයුතු කරද්දී යාගේ fixed cost එක cover වෙන්නේ නැත්නම් එතන demotivate වීමක් වෙන්න පුළුවන් variable cost එකට යනවා. එහෙනම් අනිත් approach එක තමයි full cost. The variable plus fixed. Sometimes also use the markup. You can practically work out the full cost plus markup or variable cost plus markup. May lead a higher transfer price. Therefore, receiving division may look for the external supplies. The full cost එකට ගියාම අනිත් weakness එක තමයි when you transfer at the full cost, the purchasing division has to pay very high price So sometimes it may be worthwhile them to purchase from outside rather than getting internal. So this may lead to wrong decision being made because fixed cost may not be relevant. All fixed costs may not be relevant. Right? So that we make a pen transfer pricing, setting a very good transfer price is challenging. Right? Have an approach check of plus minus here. Right. We'll go to this activity there. Division S. S කියන්නේ මේ supply division එක, right? S R දෙනවා කියන basis එක අපි යන්නේ. Supply division to receiving division. You have a direct cost 20, fixed overhead absorb 8, total cost 28. We have a standard profit markup 10% to the total cost 2.8. The transfer price is set at $30.80. Division S has proposed a transfer price $30.80 for goods which is supplied to Division R. Division R, receiving division, can buy it externally from 26. Right? Direct cost 20, fixed overhead absorb 8. Keep a profit of $2.80. The transfer price is $30.80. So rapid 10 margin full cost eකට 30.8 transfer price S suggest R can buy the same from externally for 26. Discuss the likely outcome of the transfer price of 30.8. Likely outcome of transfer price. Then may situation එකේ මොකද වෙන්න පුළුවන්? R will not like to buy it from internally. They rather propose to purchase it from outside at 26. Okay. Now you should look at, so if you buy it outside, is that good for the company overall or not? Right? Sometimes still buying this from division S may be more profitable to the company when you look at the broad overall company perspective, right? Right. Take this scenario. Maybe right, 20 plus 8, 28. At the 30%, 10%, 30.8 to R. R can buy it outside 26. So, ideal scenario is if you take this overhead 8 rupee overhead cost is a general cost incurred by the business. That means even whether you transfer this or not, this cost has to be incurred. General, not specific. So in that case, the correct cost should be 20. Based on that, you have to internally transfer by S. As a result, this general fixed overhead cost is added to the full cost. Full cost become 28 and your transfer price become 30.8. The division R now proposed to buy it from outside. Right? At 26, but actually the real direct cost to the company is 20. Right? Since because of erroneous transfer price, the R has decided to go from 26. So company is losing 6 rupees as a company because of this wrong transfer price. Here you can see the from the group perspective, group can company perspective, right? It is make or buy, right? If the absorbed overhead costs are general, cost to make is only 20, cost to buy 26. So extra cost if brought 6, right? So that is, so you are taking a wrong decision there because of this wrong transfer price. So items should be made in-house and transferred in between 26 to 20. Right? Their cost is 20. Externally, R can buy 26. So the maximum R is willing to, independently considering R willing to pay 26. Right? So your transfer price you can set in between 20 to 26. Then it is worthwhile for both. Right? Transfer price at 24 kilo sector. So the incremental benefit එකක් තියෙනවා extra 20 තමයි direct cost එක යට යන්නේ. But you are transferring for 24, 4 rupee benefit. Then from the R point of view, since external purchase price is 26, now internally you can buy it for 24. There is a benefit to R also, right? So both party managers will be happy. Both party managers are motivated in that scenario. Then, if this 8 rupee is specific, overhead data specific, not general, that means you have to actually incur it. If that is the scenario, real cost is 28 now. 28. You can buy it for 26. Then from the company perspective, buying have a saving of 2. So in that case, you should buy it externally. You should promote buy it externally rather than producing internally. Got it?
We also don't consider the markup. The markup is also, we are not considering. Markups,
Which part?
the 28 into 20% IT.
No, we take from the company perspective, right? Company perspective to produce internally. The markup is anyway to the business within the company. Here we consider, right? If you are producing from the company perspective, still you have actually spent 20 direct overhead also specifically because of this, right? So that your real cost is 28, but you can buy it from outside 26. So in that case, you should go for buying from the outside. As a company, you have encouraged buying from the outside. That will save 2 rupees to the company. Company perspective, you have to ignore the mark. Internal transfer pricing. Right? Got it? Transfer pricing markup should be considered when you are evaluating the performance of the managers and performance evaluation perspective to calculate the profit. We have used the transfer. Here we are looking at whether we should produce it internally or buying outside. Right? So that will affect based on this behavior, whether this overhead is a specific one or general. Right? And here the S division product has no market. That is why we use the cost plus approach. Right? Any market එකට මේක විකුණන්න බෑ. Right? 20 or 28, but what is the cost? The intermediate product, you don't have external market price. Right. Then the market-based approach of transfer pricing, where market price exceeds, it can use for the basis of the transfer. Right? That means the selling division, they can sell this intermediate product or the component to external market. There's a market price for their product that you are transferring internally. So if the supply division is at full capacity, then revenue it lose as a result of internal transfer shows the true cost of divisional transfer. And එතනදී බලන්න capacity එක. අපිට එළියට හදලා විකුණන්නත් පුළුවන්. Internally transfer කරන්නත් පුළුවන්. එතනදී internally transfer අපිට මේ එළියට විකුණනවා නම් 20 මේකම 20 your cost is 20, right? Assume that this 8 rupees general, so only the variable cost is relevant, right? 20. You can sell it outside 24. Right? 20. So one option is you can. So in that case, you have to determine the transfer price also 24, because now if you are operating full capacity, when you decide to transfer the product to the internally, you are losing that revenue 4 rupees that you could have obtained by selling external. So that should be added to the transfer price. Right? If division have to incur marketing cost to sell externally, the marketing price should be adjusted. Market price should be adjusted to reflect the fact to the internal transfer. අපි 24ට අපි විකුණන්නේ marketing cost එකක් දාලා නැහැ. ඒකට 50 cents යනවා. When you are transferring internally, you need not to incur that marketing cost. So the transfer price can be set as 33.5. Outside market, you sell it for 24 by spending 50 cents per unit advertising or sales promotion or commission or something. When you're transferring internally, you need not to incur that. So then you can set the transfer price as 23.5 rather than 20. Right. We have activity 4. Creative division CD of Unique Component Limited produce wooden component that it sell to external customers and transfer to other divisions within the own company. Production involved preparation of timber, cutting timber into shapes and assembling of the shapes into a component. Total component cost of component A has been estimated as 41.21, 41 and 21 cents. Variable cost is 45% of this. Selling cost incurred in selling external customers is $5 per unit. Selling price 55.63. Discuss the application and acceptability of the following transfer price, based on which component A may be offered by CD to other divisions within the same group of companies. Market price එක සහ marginal cost approach. Right. Market price එක යනවා කීයද වෙන්න ඕන transfer price එක. Very simple. If you are using the market approach, what should be the transfer price? You can sell this externally 55.63, but when you are selling to external customer, you need to spend 5. So in the internal transfer, you need not to spend that one. So the based on the market approach, transfer price should be 50.63. Right? Transfer price should be 50.63. Then the marginal cost approach, what should be the transfer price? marginal cost means the variable cost, right? When you additionally you producing items, how much you have to cost you have to incur. Here it is given 41.21 is the total cost. Of that, 45% is variable. So then you have to determine the price based on 41.21 into 45%, 18.45 is the variable cost. You can keep a margin there, variable cost plus margin, you can set the price. Okay. When so transfer pricing setting, you have to consider the opportunity cost. When there is an external market, as well as you are producing full capacity, right? So here, opportunity cost approach to transfer pricing. The optimal transfer price could be calculated using opportunity cost. Minimum transfer price equal marginal cost of the selling division, then the marginal cost of selling division plus opportunity cost of the resources used. If external market exit for the intermediate product, opportunity cost is the contribution lost from the external sales force. විස්සයි variable cost එක 24ට විකුණන්න පුළුවන් නම් 4ක් තමයි profit එක contribution. ඒ contribution එක නැති වෙනවා. එහෙනම් අපි transfer price එක decide කරද්දි ඔබ add කරන්න ඕනේ. මේ variable cost එක plus the opportunity cost. If no external market for intermediate product, the opportunity cost would be either nil, it was or opportunity lost by using resources on alternative. We got an external market, but the material that we use to produce this intermediate product can be used to produce some other product. Use the same material. So when you are producing this particular intermediate product using those materials, you are losing the contribution that you can gain by producing that other product. Whereas the other product has the demand, right? So that if you are producing that particular other product, you have the next key product. Why key product material? Yes, transferring this product X, intermediate product to division Y, right? Product X has no external market. So product X variable cost. Plus, the material that we use to produce product X can be used to produce product Z also. Since we are using it for product X, there is a loss of contribution. That should be added when setting the transfer price. Then we have more comprehensive activity. Company C is engaged in synthetic fiber production. It is situated in country A, whereas operate two production plants. Plant A manufactures single product, which is a special grade polymer. The polymer is then transferred to plant 2, which produce synthetic fiber, thin film. The polymer produced by plant 1 of special grade and manufactured specially for the production of thin film, and there is no intermediate market for it. That means intermediate product intermediate market demand for the thin film, that is the output. There is a strong worldwide demand for the thin film, and the company C is the only producer. Although the substitutes are available, we are the only producer worldwide demand එකක් තියෙනවා. Right. The following schedule shows the monthly demand. මේක අර මේ law of demand වලට අනුව හදලා තියෙනවා. Right. If the demand is 75 million liters, your selling price is 200. If the demand 100 million, your selling price 175. Quantity price එක අඩු වෙනකොට quantity එක වැඩි වෙනවා. Right? The quantity 125 when the price is 150. Right? Price එක අනුව quantity එක වැඩි වෙනවා. Right? 75 200, 100 175, 125 150. ඒ කියන්නේ මේ ඊළඟ මාසේ demand එක 75,000 නම් 200 ගාන විකුණන්න පුළුවන්. 100 නම් 175 ගාන විකුණන්න පුළුවන්. 125 නම් 150 ගාන විකුණන්න පුළුවන්. දැන් ඔය world market එකේ oil price එක වෙනස් වෙන්නේ quantity එක අනුව price එක වෙනස් වෙනවා. ඒ වගේ මේක ලොකු demand එකක් තියෙන product එකක්. ඒතර quantity එක අනුව මේ prices තුනේ ඕන එකට යන්න පුළුවන්. Manager of plant 2 has autonomously choose the level of output and always select the level of output which maximize the plant 2 contribution. And plant 2 manager, they can select whether they are selling 75, 100 or 120. How they are going to set it based on maximum contribution to plant 2. ඒගොල්ලෝගේ contribution එක වැඩිම වෙන්න විදිහට තමයි ඒගොල්ලෝ 75 100 125 කියන එක තීරණය. Right? The output of Sinpit is producing batches of 25 million liters. Minimum monthly quantity to produce 75 liters and the maximum 125. Right? 75 100 125. ඔය තුන තියෙනවා. 125 තමයි maximum production. ඊට වඩා යන්න බෑ. Marginal cost incurred in producing Sinpit, cost incurred by plant 112, cost incurred within plant 224. Right? Plant 1 එකේ cost එක 12, plant 2 එකේ cost එක 24. තමයි මේගොල්ලෝ incur කරන cost එක. Transfer price of polymer has been set at 40 per liter. Transfer price එක හදලා තියෙනවා ලීටර් එකට 40යි කියන. දැන් transfer price එක ලීටර් එකට 40යි. division එකේ cost එක 12යි. Right? Part 1 incurred 12. And they say transfer price 40. ඒගොල්ලන්ට එතන 28 profit එකක් තියාන ඒගොල්ලෝ transfer price එක හදලා. ඔය එළිය විකිනෙන්නේ 100 100 150 175 200 එහෙම විකිනෙන්නේ. right? අරගොල්ලෝ 28 තියාගන්න. ඊපස්සේ 40 වලට මේගොල්ලන්ට ආවොත් ඒගොල්ලෝ ඉන්කර් කරනවා 62 24 ඒගොල්ලන් 64 වෙනවා cost එක. right? 64 එකේ ඉඳලා යාලා විකුණන්නේ either 150 175 or 200. තමයි ඒගොල්ලන් contribution එක. So the recently divisional manager of plant 2 has argued transfer price of 40 per liter is too high. She believes the transfer price set by plant 1 at marginal cost of 12 per liter would result in increase in contribution to the C company as a whole. That ඒගොල්ලෝ 40 වෙනනේ යන්නේ. එතකොට plant 2 වල manager කියනෝනේ අපිට cost එකට 12ට දෙන්න කියලා. Right? So evaluate whether C's contribution would increase by changing transfer price as a decision. Now, අපිට බලන්න තියෙන්නේ present it is 40. At the end 40. Transfer price. Right? The transfer price is 40 not. They are incurring another 24. Their cost is 64. Right? The real revenue make area price for revenue make done. They are deciding to maximize the contribution to the group. Maximize the contribution to plant 2. අපි බලන්න ඕනේ. ඒගොල්ලෝ plant 2 එකට profit එක maximize වෙන විදිහට අදන්නේ transfer price එක 40ට තිබුණොත් 12ට තිබුණා. ඔය බලන්න. Right? If the transfer price is 12 because they have 3 alternatives. මේ තුනේ එකක් තමයි ඒකලු තීරණය. Right? So you can find how much is the contribution to plant 2 when the transfer price is 40. The transfer price 40 now. Per unit contribution එක කීයද? පළවෙනි අවස්ථාවේ transfer price 40 now. They incur 24. 64. 200 minus 64 තමයි එයාගේ contribution. Got it? 200 minus 64. 175 minus 64. 150 minus 64 multiplied by the quantity, you can see the total contribution. Right? Got it? The transfer price එක 40 වෙලාවේදී මේ levels තුනේ contribution එක යවද? The contribution එක බලන්නේ 200 minus 64. How we get the 64? From the division A you buy at 40. Division B incurred 24. Altogether their cost is 64. Then their selling price 200. So 64 minus 200 minus 64. Second scenario, selling price 175. 175 minus 64. That is the contribution. Third scenario, 150 minus 64. Now we get a very not a quantity. The total contribution is what? ඊට පස්සේ transfer price එක 12ට. The transfer price 12. 12 plus 24 36 යාගේ cost එක. Variable cost එක 36. දැන් පළවෙනි එක බලන්න 200 minus 36. 175 minus 36. 150 minus 36. Have a quantity එක වෙනස්. Multiply by the quantity and find the total contribution. ඔබට මෙන්න මේ වගේ calculation එකක් එන්නේ. මේකේ summarize calculation එක තියෙන්නේ. අර තේරෙනවනේ මේ figure එක ආවේ කොහොමද කියලා. දැන් උදාහරණ total revenue 15000. ඒක නම් lazy. revenue එක වෙනස් වෙන්නේ නැහැ. revenue එක එන්නේ ඔන්න මෙතන දාන්න පුළුවන්. This is 75 to 200. 100 into 175. 150 into 175. Revenue. 3 different prices. 75 to 200, 15,000. 175 into 100, 17,000. 150 to 125, 1870. Whether the transfer price is 40 or 12, revenue wants it. To the division B. D division එකට වෙනසක් වෙන්නේ නැහැ. Right? The same. Marginal cost. එයාගේ marginal cost එක දැන් එන්නේ 40 plus 24, 64 into 75. 75 quantity. Variable cost 64. 64 into 75, 4,800. Next one, 64 into 100, 6,400. 64 into 125, 8,000. So from the revenue, you deduct the marginal cost, variable cost. Is the total contribution. And මෙයා බලන්න යා contribution එක වැඩිම වෙන combination එක. So when the transfer price set at 40, their profit is maximized when they sell 1,000. So then they sell 100 million liters. එහෙනම් ඒගොල්ලෝ මේ වෙලාවෙදි තීරණය කරන්නේ ලීටර් මිලියන 100ක් හදලා විකුණන්න. හරි. මේ මිලියන 100ක් හදලා විකුණන්න තමයි තියෙන්නේ. Because their contribution maximized under the transfer price of 40 by producing 100 units and selling at 175. So they are getting the total contribution of 11,400. But if the transfer price set at 12, we have the proposal, right? The marginal cost, the plant one has to supply on cost. If that is the case, their cost is now 12 plus 24 incurred by them, 36, right? They are obviously අතරයි අරබලගේ cost එක 12. එහෙනම් මේක ඇත්තටම ගත්තොත් මේ ඇත්ත C ගේ cost එක. right? Company ගේ cost එක. No transfer price, no margin for the division. Right? The දෙවෙනි scenario එක ඇත්තට වෙන්නේ division එකේ profit එක නේ. දෙවෙනි scenario එකේ ඇත්තට වෙන්නේ entire company එකේ actual profit. Right? Because you are asking the plant one to transfer at the cost, actual cost. So in that scenario, the cost is now 36 into 75. 36 into 100. 36 into 125. So you deduct the marginal cost from the total revenue. Total contribution 14,275 is the highest. That is at 125 units. That means, according to the proposed pricing method, plant B managers will go for 125,000, 125 million instead of 100 million. Is that it? ඔයාලා තමන්ගේ division එකේ contribution එක වැඩි වීමම තමයි කොච්චරක් හදනවද කියන policy එකට යන්නේ. A company to make a මොකද්ද වාසි? How to find that? Now, because of this changing the output from 100 to 125, division B has additional contribution of 14,250 minus 11,100. Here, 3,150 increase of the contribution. Correct? යාලගේ profit එක division B එකේ profit එක වැඩි වෙලා තියෙනවනේ මේ දෙක අතර වෙනස. හැබැයි අනිත් පැත්තට division A ඊට කලින් විදියට දැන් එයා 40ට ට්‍රාන්ස්ෆර් කරා නම් එයාට contribution එකක් තියෙනවා 28. ඒතර ඒගොල්ලෝ මේ පරණ තැන හිටියා නම් ඒගොල්ලන්ට 100 100 හදනවා. 100 into 28 is a loss of contribution. 28 into 100 2008. Company කියන්නේ division B එකේ contribution එක අඩු වෙනවා 2800. Why? දැන් ඒගොල්ලෝ 100 40ට වික්කලා ඒගොල්ලන්ට එනවනේ contribution එක. ඒගොල්ලන්ගේ cost එක 12යි දෙන්නේ 40. Right? Their cost is 12, transfer price 40. So 100 they were under the previous situation they were producing 100. So 100 into 28, 2,800 contribution decrease because of this. But 14,250 minus 11,100 increase of the contribution 3,150. So the net there will be company perspective 350 million increase of the contribution. So according to this proposal, it is benefited to the company. The above table shows the best contribution made by plant 2 from the production of synfil. The maximum contribution is underlined. The marginal cost made up transfer price plus plant 2 24 per liter. This suggests that the free tax contribution increased by 3,150. 3,150 ගත්තේ මෙලකට වෙනස. 14,250 minus 11,100. So their division plant 2 contribution increased by 3,150. If the transfer price set as 12 instead of 40. And the production of 100 instead of production 125 instead of 100. However, plant 1 will suffer loss of contribution because of this transfer price. They earlier had 28 into 100, 2,800. Now they are not having. So overall, company see 3,150 increase contribution of the plant 2, decrease of contribution of the plant 1, 2,800. Net, still there is a 350 increase. So C's profit thereafter increased by accepting this option. Right? Because of this, there is no opportunity cost of sales of polymer. So the true cost of 12, you can use as transfer price. The inflated transfer price 40 causing the price of synfil will be artificially inflated and output is reduced. However, this conclusion assumes that this capacity is available and C is not able to use spare capacity for any other activity. Yes, that is the maximum capacity we are using, right? No other purpose, right? And we ignore that this managers demotivate part here, ignore that we ask them to price at cost, right? So we are just looking at whether this proposal will financially increase the profit of the company as a whole. Is that clear? මේක තව මීට වඩා දීර්ඝව හදන්න පුළුවන්, right? ඒ කියන්නේ මේ දෙක වෙන වෙනම අරගෙන පරණ එකේදී division A එකේ profit එක හොයන්න පුළුවන්. මේ 110 division A එකේ profit එක වෙනම හොයන්න පුළුවන්. ඒකම තමයි අපි අරගෙන බලන්නේ division A වල profit එක එනවා. එතකොට contribution එක යාලගේ තියෙන්නේ 28 නේ 40 minus 12. 28 into 100 2,800, right? 2,800. මේගොල්ලන්ගේ contribution එක 11,100. Altogether, the total contribution of the firm 2,800 plus 11,100, it becomes 13,900. But second scenario, the plant 1 transfer at cost, there is no contribution to plant 1. Plant 2 contribution becomes company contribution 14,250. So okay, you can show here we got 13,900, here 14,250. So which is more by 3. ඒක තමයි මේ summarize කරලා කියලා. Okay. Okay. Right. So, with that, I will wind up today's session. And will I got your list? I think the same students who are in the financial reporting is following this course. එතනක් තියෙනවා. අලුතෙන් අය නෑනේ කොහොමද? right? අලුතෙන් අය නෑනේ. මොකද group assignment එකට group නෙමෙයි මම ඉස්සෙල්ලා දෙන individual report එක right? මම individual report එකට පොඩි මේ topic allocation එකක් කරගෙන යනවා right? බොහෝ වෙලාවට සෞද වගේ වෙද්දි මම ඒක LMS එකට දානවා right? තමන්ට බලා ගන්න පුළුවන් තමන්ට allocate වෙලා තියෙන topic එක මම ඒකේ පොඩි guideline එකක් දානවා right? එතකොට ඔයාලට අද third week එකනේ 6th week එකේ වගේ තව සති 3ක් වගේ තියෙනවා individual එකට individual report 20 right? ලකුණු 20ක් තියෙනවා next week එකේ ඔයාලට ඒ ගැන තව explanation එකක් දෙන්න හැබැයි මම topics ටික දාලා තියෙනවා එතකොට you can study on that particular topic and you can get ready right? If you have any question we can discuss that in the next week right? So next week we will be having our usual time right? Usual time is Sunday morning right? So මේ time එකට මට සාමාන්‍යයෙන් තියෙන්නේ ඒ පාර්ට final year right? So we had some kind of workshop or some other things in that other batch so they have to shift it right? Okay. So we'll meet on next week Sunday as usual.